the question is, can it break above this level? If it breaks above that level, like I think we talked about a couple weeks ago, for me, it needs to show me that it can stay above there for a certain amount of days, multiple days, versus just a quick blip above, fooling everyone and then coming right back in. But this is a huge level psychologically, right? I mean, this again, we talked about this last time, but you're going back to these levels here, going back to the lows of the bull market, even the pre-big run here, and then even this consolidation area over here. And that's my biggest issue is the charts right now still show that we're into this area. And then number two is, to me, the bullish sentiment in crypto right now is very similar to when I made the call that 69,000 was going to be a fall and we were going to go to 20,000. And that's yeah, so I agree, right? We saw the bank earnings on Friday. JP Morgan was really the standout, and that was a tremendous report. Again, they blew it out of the water. Interestingly enough, what I noticed was that while JPM was up, we saw a lot of the regionals continue to fall, and that's never a good situation when you have good earnings from one bank, but the rest can't catch a bid. So that's a little bit of a concern going into next week. I also thought that the early sell-off in the S&P 500 was concerning as well, where you had this good news, the PPI came out the day before, everything was kind of rosy, and the markets opened up, and then they just gave it all back. And essentially, we closed flat on the day. Late in the day, we got a little float, but that's normal on a Friday with light volume. At the end of the day, the big players kind of leave for the day, and you see that gentle float back up. So overall, the price action wasn't good on Friday, considering. Yeah, I agree. And it is interesting to kind of see how the markets are shaping up here. We got this potential doji on Friday. Again, we have to see what the market does next week. But I think, like you said, it's earnings, right? We have the Netflix earnings on Tuesday after the close. Wednesday after the close is Tesla. And then the next week, we have all the big tech play companies coming in. So, as I look at this market, one of the big things, and this, I did a video earlier this week, but I know a lot of people didn't see it yet. But one of the things that's concerning me is something that my head trader, Ben, pointed out, which was this pattern here, right? So what we have is this down move from the all-time highs on the S&P 500. And then even though it looks like we're making higher lows, if we look at a chart, and I'm gonna switch screens here. I want to show you guys this because this is really earth-shattering to me in terms of what it could entail. So this is the psychology of the market, right? And we've all probably seen this chart at some point in time. But if you look at the move we had, so here was your run, let's say from COVID up, right? So the big move to the upside. Then here was your high in 2021 and the sell-off that followed. And then look at the price action following that. You're generally seeing the same, almost to a T, almost perfectly the same pattern, which denotes the complacency period on this psychology of a market chart. And what we know is that following that in general, we have a bigger down move. So to be honest, looking at this, looking at how the markets have been behaving, I do think that there's a bigger sell-off coming in the works here in the not too distant future. Yeah, it's one of those things where if this is a bear market end with, and again, I look at past bear markets and this one to me could be worse than many of the past ones because you actually have a Fed that has hiked rates percentage-wise bigger than really any time in history. I don't remember, even in the 80s, you didn't see the percentage-wise. Like here we went from 25 basis points to 5%. I mean, think about how many hundreds of percentage points that is, even versus the 1980s where we saw those interest rate increases. So that to me has to at some point play out as a shock to the system that finally comes to fruition. And it is something that I do think we will see not only the October lows of 2022, but even further on. And to smile when you say if the Fed actually pulls this off. And in my mind, I said to myself, has the Fed actually ever pulled anything off?
Nope.
like I don't think so. So I mean, listen, like a black swan. I mean, what do they call it? A white swan when they miraculously pull a rabbit out of a hat? I don't know, but to me, that's kind of the situation where it's just like, man, like they just haven't proven themselves to be capable, and mostly because they're always late to the punch, right? Whether it was the transitory and then they had to play catch up by hiking rates so quickly. Now it's in the other camp where are they going to leave rates too high for too long to fight inflation? Because that's the kind of the boogeyman. And then does it cause us to kind of go into a spiral? And that's my camp, at least. I also think that you've seen certain stocks, like if we flip over to the Apple chart here, right? Apple's had a remarkable move, absolutely remarkable move off of the lows. It's not that far off all-time highs. But if you compare Apple's chart to a lot of the other just average companies out there, you've seen rotation into what we would call best of breed as a safety play, right? So Nvidia, Apple, Microsoft, right? And to me, that's a concern because it's not that people believe that Apple is a great value here. And in all fairness, I think it trades at like a 30 or 25 forward PE. And historically, that's even rich, even in bull markets. But it's more that are people just hiding in those plays while the rest of the market continues to kind of languish. And you could bring up a bunch. I mean, there's so many just kind of average companies that aren't known as those special companies, and their charts are not very good at all. And again, to me, it spells people hiding right now, and then at some point they will get freaked out enough to even exit those. And when we see Apple and Nvidia and Microsoft collapse, that's where the Nasdaq really comes hard down. Right. They certainly haven't unloaded like I think they would have liked to. And a part of that probably is the banking crisis that's now emerging. They have to be a little bit more careful there. One of the things that I'm keeping an eye on too is that you have the scenario of a lot of these companies that are starting to send up warning signals, and even the jobs report, right? So we just got the jobs report about a week ago, and it was a little bit like if you looked at the ADP private sector, that missed and came in a little bit lighter. Even the jobs report itself, the non-farm payroll, is a little bit lighter, and even continuing jobless claims were higher than expected. So more people staying on unemployment. Now, right now, the Fed is cheering that because they want that to happen. But the question is it just the beginning of that? And is there a long way of job reduction and layoffs coming? Or is it just going to be a little bit blip here? Maybe unemployment goes back to 4% and then it stops right there. And again, it's all about, can the Fed engineer, like you said, can they engineer this soft landing? One of the things to keep in mind too is that historically, so number one, the Fed is banking, or at least the investing public is banking on easier money policy. We've even seen the bond yields come in substantially from their highs over the last 6+ months. But if you look historically at it, when the Fed actually starts cutting rates, usually that's a negative for the markets, right?
Right.
Even though people right now are like, oh, that's what we want that to happen. But that his history doesn't show that that's the way it works out, mainly because if they're cutting, things must be really bad. Yep, absolutely. So this is a cool chart, right? And so, needless to say, there's so many bulls out there, which by in and of itself is concerning to me. But my level, again, we talked about this, I think it was about 2+ weeks ago when we were chatting, 30,500. And what's remarkable here is that you just continue to hammer on this. On Friday, we saw a push above it, but by the end of the day, we closed right at that level. And here we are down ticking again. Granted, it's the weekend, so light volume. It's one of those weird things, right? Bitcoin's open on the weekends, but I don't put a lot of stock in the price action on Bitcoin because it's such light volume over the weekend. But I think that Monday is going to be a pivotal Monday, Tuesday, very pivotal for Bitcoin, because you'll get some more price action going in there with the markets open and yields and the dollar moving. The question is, can it break above this level? If it breaks above that level, like I think we talked about a couple of weeks ago, for me, it needs to show me that it can stay above there for a certain amount of days, multiple days, versus just a quick blip above, fooling everyone and then coming right back in. But this is a huge level psychologically, right? I mean, this, again, we talked about this last time, but you're going back to these levels here, going back to the lows of the bull market, even the pre-big run here, and then even this consolidation area over here. And that's my biggest issue, is the charts right now still show that we're into this area. And then number two is, to me, the bullish sentiment in crypto right now is very similar to when I made the call that 69,000 was going to be a fall and we were going to go to 20,000. And it's that psychology. We looked at that psychology of the market chart earlier. Those things are kind of eating at me in terms of whether or not this bear market is fully over. Now, whether or not we've made the lows, obviously, we should know in the next 6 months or so. But at least in the near term, something likely to me will trigger a sell-off back down a little bit. I'm still in the camp personally that it's still mostly, I would say 3/4 of it is a risk asset. What I've noticed over the last 3-4 years of Bitcoin is that it was 95% a risk asset. Well, at one point it was 100%. Then it was 95. Then it was 90. Then it was 85, 80, and now we're at 75. So, like for the banking crisis, there's no doubt about it. That was an awesome situation for Bitcoin. We showed it decouple when the markets were selling off there. So I think it's slowly maturing. It's kind of like an adolescent that needs to get into adulthood here and mature. But I still think that in this scenario, if you see a real panic hit the stock market, we see, let's say, 20% down. My guess is it does decline for the most part. I think like gold, like even like in all fairness, if it's full out panic, everything declines, right? We even saw gold and COVID quickly dip before recovering. But the question then is, if it's a longer term bear market in stocks, I still think it does get put pressure on it. But again, slowly it's maturing into a gold type entity. Bitcoin community, they always talk it up like a gold, like a digital gold, right? Like, oh, this is the anti-volatility play. But in reality, what they really want is the volatility, right? In a bull market, when you can see Bitcoin go up 400-500%, that's fantastic. That doesn't happen with a gold asset, right? You're not going to see that in gold. And so there's this kind of weird dichotomy there where people want it to be a store of value and kind of an offset to kind of the craziness. But at the same time, you usually don't get the crazy, positive, insane moves from a risk asset that's like gold. Yeah, so I'm with you on that one. Is you're definitely coming up to that. We did hit just on Friday or Thursday this kind of this upsloping trend line right here through the recent highs. So to see a little bit of a sell off there, not a big surprise. But I agree. You're coming up into a range where there's going to be a massive wall. Usually at triple tops. So triple tops are different than double tops. Double tops, you usually see a big pullback. Triple tops, it's usually a slightly lesser pullback. And then a breakout. So again, usually you'll see that type of action. So if we did get up there, I would still expect a pullback, but it would be a shallow pullback, maybe 1900, maybe 1875 before that next leg up. I still think that gold in terms of risks is probably the lesser of the risky assets to be in here with a decent reward to it. Yeah, I mean, gold to me, it continues to be my favorite safe asset, even if after this run. I still think, you're going to get pullbacks just like any asset out there. But for me, it's the metal that is probably going to be the safest one with the best reward out there.